As we move on, I call upon the President-elect of the Actuarial Society of South Africa, Peter Withey.
Thank you very much for the invitation and the opportunity to present here today that has been afforded to us as the Actuarial Society of South Africa. It's a great privilege and pleasure for me to be here with you. I have to control it, whether I know how to use it is a different story. Convention notes that went out, I made a statement that the actuarial profession as a whole and as individuals has undoubtedly been at the forefront of innovation in the financial services era throughout history. And I'm going to talk a little bit about my own experiences as well as my understanding of the history. Just in terms of my own situation, I qualified as a fellow at the Institute of Actuaries in 1989. And have been through a variety of different areas and worked in a variety of different roles, both in management and, interestingly enough, I've had the experience of being outside of the actuarial profession, and I learned so much in that experience. I was the Chief Operations Officer of an asset administration company. Our boss used to nickname me Captain Controls, because what we learned is that if you actually aren't in control of your business and understanding your business, it is a breakdown in controls that bites you. We had a unit pricing error that sat in our data for 6 months before we found it. When we found it, it cost us a fair amount of money to fix it. And interestingly enough, it wasn't the compensation to the policyholders, to the unit holders that was the problem. It was actually the cost of the consultants, the internal staff, the data things to recreate the history that actually cost us. So just having had an experience outside of the pure technical actuarial space has been an enormously valuable part of my own experience. But having taken that detour, okay, which one do I press to that forward? Okay. Okay, so we're going to have to control this from the desk. So if you could move to the next slide. I'm going to talk about innovation, and I'm going to talk about relevance, because those were the two themes of this conference. And when I was asked to make this presentation, I was sort of said, well, you can talk about what you'd like to, so I thought I'd come up with something that I could talk about without having to think too much. So I said, well, how about talking about the role of the audit actuary, because that's fundamentally what I do most of my work. And Shepard came back to me and said, no, that's not going to work. I want you to talk to innovation and relevance, and hence that is the guiding topic of my talk today. If we can get forward. I'm going to find it very difficult to talk without my presentation slides. Right, it looks as though we're starting to get to something, so if the thing, I can just signal to you to move on to the next slide when I need to. So as I said in my introduction, that actuaries have been, are, and will continue to be sources of innovation. And I said in my thing in the financial service industry, but I believe in all areas in which actuaries can provide their skills. And I think the primary reason why I suggest this is that there are three reasons, and we can move one more slide on. if it's working now. Okay, so I'm going to go back one. So I think that there are three reasons why I believe actuaries can add huge value and can be innovative. I think often the picture of actuaries is that we are actually boring people who spend our lives stuck away in spreadsheets, and that nobody really understands what we do. But I think that we can bring value to our clients because, first of all, I believe that we are above average clever. Anybody who enters onto an actuarial program, believe in yourselves, you are cleverer than everybody else around you. That in itself also brings massive responsibility. As it says somewhere, to him who much is given, much is expected, and so much is expected of us. Secondly, I think one of the key skills, because there are accountants who are clever, there are engineers who are clever, I think one of the key things that differentiates the actual profession is the inherent ability to do systemic thinking. That actually somehow in their makeup are able to get a grasp of a complex structure, a complex system, and I think that that's one of the things that differentiates us. And lastly, we're problem solvers. I have not yet met an actuary who doesn't enjoy solving problems, doesn't enjoy being given a challenge, whether it's in a Sudoku or a Rubik Cube or whatever. I have yet to find actuaries that don't enjoy solving problems. So if we enjoy them in our leisure time, why shouldn't we enjoy them in our work time and add value to society as a whole? So I'm going to just consider some of the areas, and I believe there are three primary areas where actuaries historically and obviously into the future can play a role. And that is in technical areas, in product and solution areas, and in professional areas. So this guy, who you might not recognize because he looks a bit like Bill, is actually Edmund Halley. Edmund Halley is seen as one of the early people who contributed to the actuarial profession. And he looked at data, and what was happening, as I understand it back in those days, is that governments and places were giving pensions, but they had absolutely no idea of what was behind that. And he developed the concept of a life table, the concept of data, using data and experience, and developing a life table to enable that to go forward. A complete step change in thinking in a technical space. Another example, how many of us in this room have seen that yellow book? How many of us in this room know inherently the actuarial alphabet soup? All of these things were generated. Now, I see Douglas nodding his head. He and I probably come from a generation where we had to actually calculate some of those darn things manually. But we come from a generation, people, actuaries in the past, historically created clever ways to be able to do this thing. Take a big A factor. Present value of one payment on death any year time into the future. And by combining a whole load of different factors, we come up with a single factor that we can look up in a table and do evaluation from. Now, I remember the days when that machine there was just before my time. It's called a FASSA calculator. I don't know if anybody's ever seen one, but you know, today you have your calculator. In fact, you have it on your cell phone. You have some of the best calculator ever made, the HP12C. That machine used a sort of section number, and if you wanted to multiply something, you had to crank the handle and move it across and crank the handle again. And actuarial students, I'm told, which is a generation before me, would prepare these tables of the the big A and little a factors. And the only way that they could keep their job interesting was actually to race each other to do it. And then they'd compare two guys working that. And if you look today what we're doing as actuarial students, that was the actuarial student's job, was to calculate those tables. I worked at Southern Life at the start of my career, and occasionally we had to refer back into those tables. And they were massive books with handwritten things around there when you were going back to what a policy had created right at the beginning. And the world has changed. And actuaries today are able to apply their minds, but to actuarial students are getting exposed to some of the professionalism type issues, but back those days they were just calculation machines. Innovations that other people who've gone before us have created to make our job today easier. And obviously the developments in things like the personal computer have obviously helped that. AIDS modelling. When the phenomenon of AIDS started to get bigger and bigger and bigger, it was a very specific issue to Southern Africa, probably more so than to the rest of the world. But the question was, could we price for this risk? And the only way that we could price for the risk was to start to understand it. And we needed to do research, we needed to do modelling. And people like Peter Doyle and Donald Miller in Metropolitan developed some of the earliest AIDS modelling. You know, diagnosis modelling, why are actuaries not involved in that today? When actuaries were so involved in AIDS modelling, we can bring innovation, we can bring knowledge, we can bring development to a whole range of factors, in my belief, in the technical space. So the question that I really ask you today to think about is, what technical issues or complexities in your work cause challenges for you? And how can you find a simpler way for the solution? How can you find a way to make that simpler? That's the challenge I think that we need to be asking ourselves on technical innovation. What about products and solutions? And I guess I better speed up before the MC tells me off for spending too much time. But wherever there's an environment factor, it creates needs. And I think Douglas was speaking to this earlier. We need to look at what are the needs. We don't need to take something that comes from somewhere else and dump it here. We need to look at what is the need. And we need to find solutions to that. Boring actuaries take things that have been created somewhere else and try and dump them and fit them into a situation here. Forward-thinking actuaries recognize a need and don't let it roll forward, they come up with something new. And I believe that once you find and understand the risks and the dynamics of the payoff, you can price just about any product. And that's why actuaries are being used by quants in the banks, is because they can look at the risk, they can understand the risk, they can model it. And so the development of the profession into banking, which I'll talk about later, comes around from that space. So just to talk about a few products and solutions from my own experience and examples in South Africa. Inflation fighter policies, policies that increased with inflation, both the premium and the benefit. My understanding is those were first developed out of the South African context where we were experiencing high inflation, not quite the levels of inflation that you managed to experience in the late 2000s, but certainly 16, 17% inflation back in South Africa during the apartheid era was a challenge to holding policy values, and policies were designed and developed to do that. Actuaries looked at the need, said we need to solve it, and came up with potential solutions. Dread disease or critical care is another product that I believe originated in the earliest policies, originated out of South Africa, where heart attack and stroke was a major issue. And it got passed into the modern world, and it's now a major product in the Western world. Healthcare benefits. I look at South Africa, and I think one of the most innovative companies in South Africa is Discovery. And the healthcare product sets that they've come up, the options that they've come up with, and the way that they use data to help them price their products, help them manage their products. The whole concept of the vitality system to provide you incentives to do things that are right, because actually it helps their claims basis in the business in terms of their medical aids. And just a few options that we've spoken about. So the question that I ask here is, what environmental features exist in your area of endeavour that prevent a need from being met? And what new thoughts can you implement that would make a change? And that's a challenge to each one of you in this room and each one of us in this room, I guess. I can't separate myself away from that. My context is a South African context. Your context is a Zimbabwean. They're different. But we all as actuaries should be able to apply our minds and ask those questions. And I guess the question that I want to ask and challenge you with in this room is that I believe actuaries in Africa, because we have an opportunity and an exposure to things that people in Europe don't have. I think young actuaries and young training actuaries in South Africa, and I guess it's much the same here in Zimbabwe, have exposure to stuff that if they were sitting in the UK, they'd never see some of the stuff that we see. They'd never be given the level of responsibilities and options that we see. And the question that I ask you and myself in this room is, what Zimbabwean innovation will lead the world of insurance in the future? Or perhaps banking, or perhaps healthcare, or perhaps risk management, or perhaps engineering. We don't have to, as a profession, limit ourselves to what we know. We have the abilities and skills to look beyond that, in my opinion. So turning to the innovations in the professional area, more recently to speak of those features, the profession really started, I guess, in the pension space and then into the life insurance space. When I qualified, we were caught with the change of actuaries getting into the general insurance, so suddenly I had one extra exam that I had to write. Those of my colleagues who had registered with the Faculty of Actuaries managed to sidestep that exam, because at that point in time the Faculty of Actuaries didn't have general insurance in its set. The interesting thing that had happened there is that you'll find that the Faculty of Actuaries at one point in time had a very high proportion of their member body outside of Scotland, and a large portion of that was in South Africa, and it was simply because there was one less exam to write. And as a result, so the profession back then moved into general insurance, and where are we moving today? Banking, in South Africa, banking is a major area, and I'm going to sort of pull out a few features from the Actuary magazine. This gentleman here, I believe, spoke at your convention last year, Michael Tichivera. Then the Institute of Actuaries in Australia, talking about the developments that are happening there. And just an interesting piece of information is that one of the largest employers of actuaries in South Africa is one of the banks. They've recognized that in the actuarial community, in the actuarial students and those coming out of having studied actuarial at university in South Africa, they are getting exceptionally good quantitative analysts. And they're being used in the banks, in the credit modeling and related space. So clearly actuaries can be innovative, can step outside of their comfort fields. Let's move to another one. Actuaries in risk management. There is no doubt in my mind that the actuary is well placed to be the chief risk officer, without doubt in a financial service industry. And hence the profession has developed the CIRA qualification. And to be perfectly honest, if I was studying today, and I'm looking here at Loreen, before you forget out of the habit of studying, if you haven't done CT9, do it. Get the CIRA qualification behind you, as well as the FIA, because that, to my mind, is an enormously powerful qualification moving forward in the profession, to have that qualification behind you. The CR role in Solvency II in SAM in South Africa, another area where actuaries have to be able to play a big role. But what about wider areas? And I don't know if any of you have read the Actuary magazine. A few months ago, an article appeared of the actuary in a hard hat. This is a gentleman by the name of Arthur Else. He is a fellow of the Actuarial Society of South Africa. He is a gentleman I have great respect for, because he went back at the age of mid-50s and studied CIRA from scratch. Went back into studying. I spoke to him one day and I said, Arthur, how was it? He said, I had to get the youngsters in my office to teach me stats again, because I'd forgotten everything about that. I had to get them to help me. And what an indication of an innovative person prepared to go back and develop themselves further. And as a result of that, he's been involved in the risk management function for a construction company. And a major project that they were involved in And the reality is that as an actuary, he brought value to that table, that they wanted him to be part of that team. Actuaries can be innovative professionally and move themselves forward. Actuaries in data science, or should I use data analytics, or should I say big data? It's clearly an area that we can do work in. And one of the biggest employers of actuaries in Australia, so I was told a few weeks ago by the president of the Australian Institute of Actuaries, one of the biggest employers of actuaries in Australia is a data analytics firm. Because again, they're recognizing that the skill set, the mindset, the abilities of the actuarial profession play a massive role in this space. So the Institute of Actuaries, the Actuarial Association of Australia, the Society of Actuaries, the Institute and Faculty of Actuaries, Actuarial Society of South Africa, and many more are looking into this space as an area of development into the future. So what new innovative areas can Zimbabwean actuaries get involved in? And I just realized that there's an area in the heading there that should say professional at the top, not product and solution. But what areas can you get involved in as a profession here in order to expand the role and the influence of the actuarial profession? So let me turn then to the second item, the context of relevance. And the first thing I'd like to say is that this is a key theme for our current ASSA President, Rosander Silva. And to be perfectly honest, it will be a key theme for me. If we as a profession do not remain relevant, we will become irrelevant and we will not survive in a changing world. Relevance of the actuarial profession has to be fundamental. It has to be a key element of what we do. And I believe that that relevance has three features. We have to have relevance to our clients. We need to be their trusted advisors, not their calculation machines. Computers can do calculations. Actuaries need to bring trusted advice. We need to come, and as Douglas had spoken, we need to, as a profession, develop the trust of our clients in our business, and the trust of our clients in what we can do. And it's a fundamental role for us as actuaries. I believe if we can't be filling the role of trusted advisor, we will get backset into being just calculation machines. And that's not what I want my profession to look like. That's not what I want to be known for, as Marjorie was talking earlier. Secondly, we need to be relevant to our society. One of the fundamental issues of a profession is the public service or the public interest mandate. And in order to fulfill that, we need to be sometimes taking stands that our clients may not enjoy, even though we are their trusted advisors. And even more important, if we are able to be their trusted advisors and make statements that our clients don't necessarily like to hear but need to hear, then we are playing our function, we are playing our role, and we are talking into the public interest. Can we speak into government policy? And I think this is an area where we as the profession in South Africa have not developed ourselves as much as we might. From what I can gather and from anecdotal evidence, I think you in the Actuarial Society of Zimbabwe have perhaps been able to improve that and do that a bit better than we've done it in South Africa. I guess one of the differences that we have in South Africa is that unfortunately our profession is still highly dominated by white males. And it's an issue. That's one of the relevance to society that we as Actuarial Society of South Africa have to address. As I look around this room, I don't see that as a problem for the Actuarial Society of Zimbabwe to be able to talk into society. The problem that we have in South Africa is that we aren't connected into those people who are making policy decisions. I don't know if that's the case here in the Actuarial Society of Zimbabwe, but my assumption or my understanding of what you have achieved as a profession is that you are potentially able to speak into that. And there are ministries and para-state organizations that may look into you and ask you for advice. It has to be a critical part of us as a profession. And lastly, I believe we have to be of relevance to our profession. Now that's a bit of a strange thing to say, but this is now talking to us as individual actuaries. And I guess the first two items where we talk about being relevant to our clients and relevant to society is something that can apply to both the profession as a whole, but also to us as individuals. This is very specific to us as individuals. What is our relevance to our profession? What role are we playing in developing and growing our profession? And I think that's a challenge for each of us. And in conclusion, then, I would say that the actuaries that have gone before us have left us a legacy. If you look back from Edmund Halley developing the life tables right through to what we have today, we look at the areas of influence that actuaries are in today. We have, as actuaries, those that have gone before us have left us a legacy of innovation and relevance. My challenge to you is it surely must be, and to me, is it surely must be our obligation to pass this on to future generations of actuaries. Thank you very much.
It's a very question, it's a probably contribution on the issue of the relevance of the actuarial profession going forward. To add on to technology, like I said, I think regulation in Zimbabwe might be a threat, sort of, to the relevance of the profession. I'm thinking of the circulars that are being issued of late. We as a profession have been caught into a trap, sort of, that there is the compliance part of the actual squad, and also there is the competence and care. Just to give you an example, competence and care will tell you that you are supposed to advise pensioners or life insurance groups to say, de-invest from these assets because there is going to be, we don't know how cash or other cash equivalents are going to perform, and invest in equities or long-term assets like Mr. Wot was saying. But then again, you are also cutting between the two to say there is compliance part. IBEX says you cannot invest more than this amount of percentage in those assets. So you want to be relevant to the stakeholders, but at the same time you want them to be compliant to the regulation. So there is I don't know how the regulator can adjust that, but I think that's another threat to the relevance of the actuaries. Thank you.
Thanks a lot, Peter, for such an insightful presentation. Mine is more like a comment, straight to the very last element that you talked about, which is that of relevance. I come from I'm not an actuary, but I come from a financial engineering background. And one of the things that you tend to find is that as technology improves, those professions that are very technical, for lack of a better phrase, becoming redundant very quickly. I'll give you an example. At MIT in the United States, you have computer systems that have been developed now that can actually do brain surgery entirely with no human intervention. We have had your expert decision system that fly airplanes, and I think you can also imagine that we are going to have self-driving cars very quickly. The technology is coming very quickly. So you find that professions that are very technical are quickly being replaced. I think your big consulting firms like Milliman in the USA are actually beginning to employ actuaries to actually design the systems rather than do the day-to-day actuarial work. So in this part of the world, maybe because we lack the degree of advancement, it may be the case that we don't think of these things, but you find that disruptive innovation sometimes tends to reach this part of the world very quickly once it's taken root. So I think going forward, this is an area to look into, that as much as we are going to be relevant going forward, are we putting the measures in place so that we can also adapt to changes in technology that also allow the profession then to move forward? So maybe there was a discussion earlier on the issues of judgment. I think that may actually maybe take a bigger role going forward instead of maybe the number crunching. Thanks.
Thank you very much for that. the first point I had on relevance is relevance to our clients, that if we aren't seen as the trusted advisor and simply become a technical calculator, we will become irrelevant. And you have highlighted very clearly some of those issues that will come into play. And that's where the professional overlay. So it's very interesting, if I may talk a little bit, so I'll talk off the cuff rather than in my presentation, while other people think about questions they want to ask. But one of the discussions at the International Actuarial Association meetings that I attended a couple of weeks ago was around the whole question of the whole data analytics question. Aren't data scientists better than actuaries at that? And at the technical piece of it, yes, they probably are. They're way ahead of us there. But bringing in the professional leg of it, the ethics that come with that, the thinking beyond just what's in the data, and taking that into play becomes a key element in the mix.
Okay. Any more questions? Comments? Okay.
Thank you. It's very pleasant for the contribution on the issue of relevance of the actual profession going forward. To add on to technology, like I said, I think regulation in Zimbabwe might be a great sort of to the relevance of the profession. I'm thinking of circulars that have been issued of late. We as a profession have been caught into a trap, sort of, that there is the compliance part of the actuarial squad, and also there is the competence and care. Just to give an example, competence and care will tell you that you're supposed to advise pensioners or life insurance groups to say, de-invest from these assets because there's going to be, we don't know how cash or other cash equivalents are going to perform, and invest in equities or long-term assets like Mr. Otto was saying. But then again, you are also caught in between the two to say there is compliance part. IBEX says you cannot invest more than this amount of percentage in those assets. So you want to be relevant to the stakeholders, but at the same time you want them to be compliant to the regulation. So there is I don't know how the regulator can adjust that, but I think that's another threat to the relevance of the actuaries. Thank you.
Question. I think while it's happening, there are a couple of questions now. I agree with you. I think that the regulator provides us both with opportunities when he insists on actuaries being involved in general insurance, but he also provides us with limitations, and we as a profession have to make sure that we don't get pushed into too much of a box by the regulator, and that so what we've seen, again, talking with people at the IAA meeting and talking particularly with people in Europe, is their fear is that the actuaries will get stuck in the actuarial function holder role. And those of you who know Solvency II will understand this. Those, I'm not going to try and explain Solvency II in this meeting. But if you get stuck into the actuarial function holder space, you will get stuck aside as a technical person. If you go into the chief risk officer space, you become a key player in the division and in the determination of the direction of the business. So the risk is that the regulator forces us into the actuarial function holder space only, where I believe that actuaries should be chief risk officers.
Just going to comment on behalf of the regulator here. One of the things that you can do is apply that fifth principle and communicate. If there is a problem, communicate with the regulator. They do listen.
My question is, are the professional bodies' education systems not too rigid sometimes? And doesn't that, in a way, affect innovation? Because, I mean, you have to go through 15 exams, each one shoving so many models in your head. By the time you're done, you really have no space to be innovative.
You mean by the time you've got to the end, if you haven't done CT9 as part of it, you're going to have to, that's just a step too far. The camel, the straw that broke the camel's back. I think there's an element of truth in what you say, but and education structures need to change with need. So if we look back to the change in the actuarial education program over the history, and those of us in the room with greyer hair will have had a very different structure to what those of you in the room today, and those of you who are still studying. The level of statistics that was in my studying program compared to what you guys are looking at today is very, very different. So I think that the education program changes and moves with time. It's my understanding, and I'm not sure whether this is just anecdotal, but I think that the IAA has been looking at their total education program and trying to set a sort of a basic minimum of what an actuary should know in order to be considered an actuary. But I think the IFOA is about to start on a review of their total education program to ask the questions: are there things that actuaries need today that's not included in our program? And therefore they may well end up changing that. So I think you're right. Education does tend to follow the history. But it's really once you are out in the world that you bring the education and learnings that you brought to bear. So we spoke a little bit earlier about the statement, and let me just pull it out, that was in the panel discussion, that the art of guessing, which I preferred being when it was described as a application of professional judgment. The question was, where is that taught in the program? Well, it's kind of a little bit of it's taught in the fellowship program, but actually it's taught in the University of Life and in the University of Hard Knocks. And it's when you're out there and starting to apply this stuff that it comes into play.
Okay, thanks for the response. What about, if you look at it, it seems that disruptive technologies come from thinking outside the box. And how do you solve a problem where, as a profession, you need to let people think outside the box, but then still have a minimum standard? Where's the line between the two? I mean, yeah, you don't want to leave someone at a stage where they can't think of it.
And again, I think that's an ongoing challenge, and I think that's an ongoing challenge that happens. That's why a statement that somebody made the one day is that actually your education as an actuary doesn't stop when you pass the last exam. In fact, in many cases, that's simply the foundation and the start of it. The education of the actuary really starts when you are working, when you're applying that knowledge. And it's actually in the actuarial professional space, in my mind, it's the application of the knowledge that you've learned into innovative spaces that brings the value.
Any more questions, comments? Okay, great. Thank you very much for your lovely presentation, Peter.
Thank you very much.